Good morning, students. Today we are going to discuss our next chapter, chapter number 4, that is process and basis of accounting. So what is the process of accounting? Process of accounting. As we all know, accounting starts from identification of transactions and ends. The main objective of accounting is to calculate profit and loss. So accounting starts from identification of transaction. What does it mean? Identification of transaction, as we all know that in accounts only those transactions are recorded which can be termed in terms of money. That means non-monetary transaction could not be recorded in accountancy. So all of us, we have to identify the monetary transactions. Next we have preparation of vouchers. On the basis, when we identify the monetary transactions, then these transactions are recorded in source documents. Source documents means that those documents in which the transaction is recorded at first times. And after preparing source documents, then vouchers are prepared. Vouchers are the authenticated proof of any transactions, and vouchers are printed separately by own firms, and vouchers are arranged in chronological order, that means according to date wise. Next we have recording in books of original entry. On the basis of vouchers, we just record the transactions. Original entry means journal. So we just properly record the transactions in journal, as we have rules. So 3 rules of posting in journal, and they are scientific rules. That means personal account, real account and nominal account. So on the basis of these 3 rules, all the transactions from vouchers posted into journal. Next we have posting to ledger. After preparing journal, the same nature of transactions are placed at same place. That means to say, so that we can know the balances of the transactions. So ledger means arranging or classify the transactions. Classifying means putting the transactions of same nature at same place. So after then we will calculate balances of ledger account, and with the help of those balances, the last and final step is calculation of trial balance and financial statements. So whether we also want to check whether our accountancy system is right or not. So for this we prepare a statement called trial balance. Trial balance is just prepared to show the arithmetical accuracy of the accounts. And financial statements means the ultimate goal of accountancy is to calculate profit and loss account. So by preparing trial balance, we can also prepare trading and profit and loss account and balance sheet, which shows the financial position of the business. So they are included in financial statements. Here the process of accounting is quite completed. Now we will do the remaining topic, that is basis of accounting. Accounting is based on two concepts. The first one is cash basis of accounting, and the second one is accrual basis of accounting. What does it mean? Cash basis of accounting means transactions are recorded on the basis of cash only. Transactions are recorded on the basis of cash only. It means if there is any receipt of cash, only then it will be recorded in accountancy, and if there is any payment of cash, only then these expenses will be recorded. So cash basis of accounting is basically used by professional people like lawyers, doctors, chartered accountants, etc. Why? Because they received their fees in cash. That's why they use this basis of accounting. So this cash basis of accounting is quite a simple method, and there is not any need of any estimation, because you just record the transactions on cash basis. If it is received, then we will record received or paid, and if it is not received or paid, then we will not record. So there is not any need of any estimation. But there are some disadvantages of this method also. What are the disadvantages? This basis of accounting does not prepare a clear and fair view of profit and loss. It does not give a fair view of profit and loss. Why? Because there can be some outstanding expenses, there can be some prepaid expenses, and they are not recorded in cash basis of accounting. That's why, according to this method, profit does not prepare a fair view of the accountancy. Next, not follow principles, not follow matching principle. This basis of accounting does not follow the main important principles of accounting, that is matching principles. Matching principle means income should be matched with expenses. Third one is recognized by Companies Act 2013. This method is not recognized by Companies Act 2013. So, according to Taxation Authority, according to Companies Act, this method is not suitable for accounting. So, what is the right method? The right method is accrual basis of accounting. Accrual basis of accounting means all expenses and income should be recorded whether they received or paid in cash or not. So, all expenses and income should be recorded. So, this method is adopted by actually the firms, companies or the existing businesses. So, this is the important method, and in accountancy we just follow accrual basis of accounting. So, the disadvantages of cash basis will become the advantages of accrual basis. How? That this method depict the clear and fair view of the situation of the business, and that means it prepare a true and fair profit and loss. Second, it follows matching principles, because cash basis is not following matching principles, but accrual basis is following matching principles. And the most important is accrual basis of accounting is recognized by Companies Act 2013 as well as income tax authorities. So this is the most important method. But there are some disadvantages of this method, that this is not a simple method, as we have to follow a lot of principles, and this method is based on estimations. Why? We just put an estimation of some expenses like provision for debtors, depreciation. These all are estimation based expenses. So accrual basis of accounting includes estimation, but cash basis is not based on any estimation. So in this way we just completed basis of accounting. I hope it is clear. Thank you.